Central Bank of Nigeria reports that it is preparing to bar foreign portfolio investors from the open market operations auctions are false. And the tool was introduced in 2015 to stabilize the naira following the collapse in oil prices. And joining me now to discuss this is Akpevwe Oputu. He's a fixed income dealer at Access Bank. Akpevwe, thank you so much for your time today. I think that may have reassured a few people, but it does speak to the uncertainty that some have been speaking to around the central bank's policies around interest rates specifically and their game plan for the naira. Do you get the sense that this will reassure some investors, and potentially what do you think will be the impact of this on the OMO market moving forward?
Okay, good afternoon, and thank you for having me on the show. So we've just gotten some insight from the central bank, and they've described this as false news. They have no intention of barring the foreign portfolio investors from participating at the OMO auction. If you've looked closely and followed the data, you could see that the foreign investors actually control 1/3 of the 40 billion on the OMO market as at December of last year. I think the CBN has actually taken the rates up from the last three auctions that we've seen on the 1 year at 10.1%. They've actually done this to encourage the foreign investors to get good returns on their investment, and they've done it in a way to encourage more inflows into the system as they try to manage the foreign exchange rate while they try to strengthen the naira and the FX market. So I think that the rumor that came out yesterday, and as they have claimed, is false. And with the volume they sold at the auction last week, a total of 330 billion, 230 billion on the long end of the curve. It actually shows that they are doing this to encourage the foreign investors to get good returns for their investment. Coming from last year, where we were seeing volumes of 40 billion, as high as 80 billion on offer on the long end of the curve. This is actually a jump for the central bank, and I think they're going to do much more to see that the foreign investors are encouraged and they get good returns for all their investments.
All right, let's take a look at the market's recent performance. So I'm hearing that there have been some maturities that have really released a torrent of liquidity in the markets. Can you tell us how you anticipate that yields are likely to trend in the short term for treasury bills and bonds moving forward?
Okay, so on Tuesday, we had an over maturity of an estimated 124 billion coming to the system, and this has increased the system liquidity to about 380 billion. However, we haven't seen a lot of demand as we should on the bond space. The yields are currently trading around 7% on the 2024 maturities. The mid-term bonds trading around 9%, but the long end of the curve, where we have the 45s and the 49, they've remained flat at 11.2% levels, trading much lower than where the last auction closed at 11.80 levels. So even with the system liquidity at this elevated level, we haven't seen a lot of traction in the fixed income space. On the treasury bill, we've just seen a slight demand around the mid-end of the curve, around the September, the October maturities, currently trading around 6.5% levels. Because the OMO auction has been seen to where you can get the most attractive yields, the demands are being pushed to the OMO space. So we'll see a lot of demand tomorrow at the OMO auction, where the yields are currently trading around 7% for the 89-day security, and 8.5 on the mid end of the curve, and around 10.1 at the long end of the curve. So with the liquidity we see in the system, we'll actually see the central bank conduct an home auction tomorrow to maybe take out some of this liquidity we're having on the system right now.